You would think that RRR would be the big blockbuster release for the weekend, but certainly that was not to be the case. There was an even bigger headline, and the media pack as a result, as a whole, is doing incredibly well. I'm speaking about the merger of PVR with Inox. And in fact, let's talk about that a little bit more, because that really is the story of the day. Those stocks buzzing in trade, PVR, for example, gaining as much as 4%. Avan Dubash is here to tell you exactly what that deal is about and what's ahead for these two companies and the mammoth merger that is coming up. Avan, over to you.
Well, yes, indeed. Now we'll have to get accustomed to saying, want to go for a movie this weekend to PVR INOX, because the biggest multiplex deal has been hashed just on Sunday, with both of these entities coming together to create the largest multiplex chain in the country. It's going to have a network of 1546 screens in total. Now, the board met and they have decided that it's going to be an all-stock amalgamation deal. It's going to be hashed with the INOX shareholders receiving 3 shares of PVR for the 10 shares that they hold of Inox. Pawan Kumar Jain, the chairman of the Inox group, he is going to become the non-executive chairman of the board. Ajay Bijli is going to be appointed as the managing director, and Siddharth Jain is a non-executive, non-independent director, and the board that will be constituted and rehashed is going to have total of 10 members. The Inox promoters are going to become co-promoters in the merged entity and will hold a 16.6% stake, whereas the PVR promoters will hold a 10.6% stake. Now, analysts are hailing this as a huge positive. Elara Securities believes that this is going to be a deal that will be a win-win in the cinema industry. Synergies will be felt on the ad revenue front, on convenience fee, and a benefit of nearly 150 crore rupees on the EBITDA. They believe that PVR will get an EV/EBITDA multiple of 14 times 1 year forward, and Inox will get a an EV/EBITDA multiple of about 11 times 1 year forward. CLSA also believes that this is going to be a compelling synergy. It's going to consolidate the sector and have very strong growth ahead. They retain a buy rating on both PVR as well as Inox. Goldman Sachs as well sees very strong synergies going forward in the form of potentially higher F&B as well as advertising revenues and better ability to now negotiate rentals. In terms of the combined entity, Elara Securities says the combined revenues for FY24 could be at about 6,800 crores. Margins are seen in the range of 20 to 24%, and the total market capitalization of the combined entity could be over 21,000 crores. And going forward as well, the transaction most likely does not require the CCI approval, because the combined entities, due to the COVID-led pressures, are below 1,000 crore rupees. But all in all, this is big news, and both the stocks of the companies are flying high in trade today.
Avan, very big news, a mega blockbuster deal, and as Avan mentioned that both the stocks are actually soaring in today's trading session. So let's talk more about how are these stocks poised in the future with our guests for today. We have Kunal Bothra, who's joining us, as well as Ashish Maheshwari. Good morning, Kunal. Good morning, Ashish, to you as well. And Ashish, over to you first. How do you view both of these companies? Is a win-win deal for both, do you assume?
Yes, in my view, it's a win-win situation for both these companies per se, because post-pandemic, first of all, in pandemic, both companies have suffered decent amount of losses. But now, as a lot of blockbuster movies are coming, and all these, both of these companies were having planned to open at least 200 screens in various part of the country. So now they are going to have, very dominant market share. Even I'll call in multiplex business, they'll be near to monopoly kind of situation in many states. So it's a win-win situation for both shareholders. I think as far as share swap ratio, Inox shareholders tend to gain compared to PVR shareholders, but because they are having more dominant presence in western part of country compared to PVR, where the most revenue comes. So Inox is a good buy in my view, and from my side is a thumbs up, because a lot of synergies are there now as far as both companies' business models are concerned.
Okay. All right, so that's the view on the fundamentals. Kunal, I'm coming to you on the charts. Now, obviously, this is a news-based event and these stocks are going to react as a result of that. But how do you play it from the perspective of the retail investor?
Morning, Alex. Morning, everyone. Yes, both these stocks have reacted PVR is up some 5-6%, and I think Inox, the last I had seen, was up some 12% or 13% for itself. Now both these stocks have reacted quite positively, but we'll now need to wait out for a period of consolidation over here for these stocks. So I think there's no sense into jumping these on these names at current juncture because of the outperformance the stock has shown over the last 1 to 2 months, as well the gap ups which these stocks have shown. So we've seen that so many times when such kind of news flow it gets or events they pan out. We typically expect stocks to get into a time-wise correction. So I would expect that both these names, PVR as well as Inox Leisure, they could be good bets from a longer-term play. But I think one should not look to jump on these momentum names at current juncture. Wait out for decent amount of correction to these stocks. That could be a good opportunity when one can start nibbling in.
That's a take coming in from Kunal as well on both of these counters.